This is Justin Pulitzer. This is a dedicated video for Apple. Today's date is November 30th, 2014, and let's get right into it. I'm sorry over here in advance that this bit of the chart is a little bit mucked up. It's currently what I've been using, but for the purposes of this video, let's start with focusing over here on Apple's previous historic run before its kind of epic pullback. So if you take a look here, this was the iPhone 4S gap. It had a bit of a pretty big run, a pretty sizable pullback, and then a continuation of that run up to the historic high of 100.72, which you can see we are trading well in excess of. So where is Apple going to stop? The answer is nobody knows because it hasn't topped yet. But we can probably get an idea of where there might be some trouble. If you take a measure from this gap low all the way up to the top, that's a measure of $37.33, and if you do it from the close, it takes you to $40.66. So if we kind of come into modern time and we tack that on, you can see Apple had a fairly similar earnings type of a gap here, and if you add that into the low of day from this day, I'm not even talking about from the low of the gap because we're well in excess of that, but if you add both of those figures, the 37.33 and the 40.66, that takes Apple roughly to where it currently is trading. That would take a measure move with the lower amount to 117.43 and the high to 120.76, and you can see we're roughly there. There are a couple of other ways to measure this. If you take Apple into a weekly chart, you can take the measurement from the run. This doesn't. Does this take it into account? Yeah, not really. Let me go back a little bit further. 4 years weekly. Yeah, there we go. If you take this low here, which was the 51.90, and you take it all the way up to the high here of the 100.72, you can see that that's a $48.82 move. And if you measure it from, this was sort of the launch point, that's why I used this low, and if we use the low here from this launch point where this really got started, that low was 73.05. If you add that into if you add the 48.82 to that, that would take price to 121.87. So that's another potential point for Apple to stop. I've been looking at this though. If you take this high, you measure it to this low, and then you add on a 161.8 Fibonacci extension, that takes price up to 128.97. That is a still pretty big move to go. I don't think that it's going to do this in a straight line, although the way Apple has been trading, it could be there in a couple of trading sessions. However, I think it's prudent to probably start booking some profits in Apple now. If you haven't done so, I think you're being a little bit greedy. You can see Apple has been in this, had been in a pretty defined up channel. It has now gotten even steeper, and it is trading at the top of that area. I think it would probably be prudent to take some profits in Apple, and if you are not, I think that you probably want to start stopping out losses. I wouldn't say losses, but looking to use a stop to book gains if you take out somewhere in this bar, so anywhere between the 116.62 and let's say the low of this day, which is 117.45, so let's say 117. If you I wouldn't really want to see anyone lose, on this gain much more than that. If you take out this this kind of topping bar, we haven't taken out that high, then I think you've got to be looking to book some gains below this 117 area. I do think it is possible for Apple to just chop sideways and work off some of this excess like it did here. I had discussed this being over here, being a long entry, and then took profits again, being a little bit rank conservative over here. But and Apple has continued higher. But I do think that this stock at some point is going to come back and retest its 20-day moving average. I think that at the very least, that is a day trade long for a bounce and potentially a swing trade for a move higher, like if we did some type of a pullback here and then extended higher to get up to that 128. But Apple obviously does still have some room, but the purpose of this video is just to point that it is starting to get a little bit steep. You can see that we've been over here, we kind of moved in a little bit of leaps and bounds, but here it's kind of been this gradual, grind up. Stock looks pretty bullish. I still think it's by the dips. If you are not in it, I think it is a little bit late to first be chasing up here close to 120. I would for sure wait for some type of a pullback. The areas I think that could pull back are obviously the 20-day moving averages, which currently is around 113. If that comes back down to the channel, like if we dumped here, it would be closer to probably 114 by the time it got here. I do think also this 110.30, which had been this bit of a consolidation and launch point, would also be a potential buy. And I do think now that 109 and 110 area, which was sort of some resistance, is now going to be support. My guess is by the time if it got down there, that the 50-day moving average, which was currently very close to 106, would coincide with that, and that would be a buy. It would also be a confluence with this prior up channel. So we'll see how that if it came down pretty steeply or wherever this prior up channel would now probably be some support. If that happened to coincide with this and the 50-day, that would be great. So let's keep an eye on that, and that is how I am viewing the Apple chart. Thanks for watching. Be sure to follow me on Twitter. My handle is @JustinPulitzer. Cheers.